Hello everyone. Today we're going to talk about the many central bank meetings this week, the Bank of Japan, Reserve Bank of Australia, the Fed, and the Bank of England. Then we'll talk about the U.S. employment data coming out on Wednesday and Friday. Finally, we'll discuss today's important EU CPI figure. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my Week in Focus. Now, the meetings of 3 of the 4 major central banks, plus Australia, followed by the U.S. non-farm payrolls, the biggest indicator of the month. It barely gets any bigger than this week for economic events. Plus the widely watched U.S. ISM index and the final purchasing managers indices from around the world. This will be a volatile week for the FX markets. Now, none of the central banks meeting this week is expected to change its interest rate policies, but there will still be plenty to watch and debate. The key will be how they all see the future shaping up and what guidance, if any, they can give about their future intentions. The Bank of Japan just changed its targets and its methods at its last meeting on the 21st of September. It dropped the monetary base as a policy instrument and implemented yield curve control instead. It's way too early for them to make any changes yet. I'd expect them to evaluate the progress so far, but nothing more. Now, standing pat like that may cause some disappointment and cause the yen to strengthen a little bit. A few analysts expect the RBA could ease at its meeting on Tuesday, but I don't expect any changes. Australia's recent third quarter headline CPI figure was higher than expected, and the Australian economy seems to be fairly healthy. It's growing solidly and unemployment is falling. Added onto that the recent rises in iron ore and coal prices, and I look for a more optimistic statement that could actually boost the Australian dollar. The FOMC decision on Wednesday is more about preparing the market for what they're likely to do in December than what they might do at this meeting. I'd expect them just to tinker with the statement to give some reasons why the case for hiking rates has strengthened further. That would be a strong signal of an impending hike in December and would probably be positive for the dollar. Now, the minutes of the Bank of England's September meeting said that if the economy develops as the Monetary Policy Committee expects, a majority of members expect a further cut in rates sometime this year. However, following the strong purchasing managers indices and the surprisingly strong third quarter GDP figure, plus the continued weakening of sterling, I expect the Monetary Policy Committee to remain on hold at this meeting. That could boost sterling somewhat, although, as the graph shows, the market's no longer discounting any further rate cuts in Britain, so it shouldn't come as a great surprise. Meanwhile, as for the employment data, the ADP report on Wednesday and the non-farm payrolls on Friday should play their part in setting up a rate hike in December. After the surprisingly low 156,000 number in September, payrolls are expected to bounce back to 175,000. Now, given that Fed Chair Yellen has said the year-to-date average monthly job growth of around 180,000 a month is not sustainable, yet another gain of nearly that level would probably solidify the resolve to hike in December and be supportive for the dollar. Finally, for today, we have an important EU figure this morning, the EU-wide CPI, Consumer Price Index. Friday's 20 basis point, 0.2 percentage point rise in annual inflation in Germany makes it likely that we'll see a decent acceleration in Eurozone inflation as well. That could increase speculation about an early end to the ECB's quantitative easing program. So any acceleration in inflation today could be Euro positive, especially if the third quarter EU GDP figure, which also comes out today, manages to beat expectations. For an update on the U.S. indicators coming out today, please watch my North American opening market comment. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade. Bye.